One of the biggest shifts that we've seen in the last few years is how much existing bank relationships matter. 4 or 5 years ago, it was simple. You use your credit, you pay it on time, you keep your profile clean, and that was enough. But now, banks are putting way more weight on whether or not they already know you and trust you. So when you're building your business credit strategy, whether you're just doing it on your own or you're working with a company like Fund&Grow, the temptation is often to go after whatever the longest 0% offer or, flashiest reward system is. But my top recommendation is to start with the banks that you already have a relationship with. Because let's say Bank of America only gives like 9 months of 0%, and some other bank is offering 22 months of 0%. Well, on paper, you go with the 22 months. It's easy. But if you've got a solid relationship with Bank of America, odds are you're going to get approved for way more money with them than if you start a brand new relationship with somebody else. Take American Express as another example. They live and die by relationships. If you've never had an Amex card and you apply to them with like an 800 credit score, chances are they're going to start you out with like a $2,000 card. And most people get discouraged by this and they'll throw that card away. That's a huge mistake. Because if you actually use that $2,000 card, you pay it off, you do that for a couple months, and then go back to Amex, don't be surprised when they approve you for $30,000. Not because your credit report got better, but because you showed them that you're a reliable partner. That's the power of existing relationships. Even if the offer isn't as flashy, banks that you've already worked with are oftentimes your best bet for bigger approvals. So when you're planning your funding strategy, don't just go after whatever the best 0% is or best rewards program. Really focus on what banks have you already worked with and what relationships can you take to the next financial level.